Oak Bay Resources and Energy presents Biz Sense.
Hello and welcome to the first and brand new episode of Biz Sense, a show where we break down the statistics for you and give you the real picture. In your own words, I'm Stevie B. Tonight in the show, we'll take a look how to plan your holiday, if you're one of those who likes to do things at the 11th hour. Also, we'll take a closer look at the markets and their behavior in an exclusive chat with Minister of Trade and Industry, Rob Davies. It's a power-packed half an hour. Without much ado, let's have a look at the headlines. Well, the true value of Truworth, the South African retailer, takes a giant leap into Europe. It buys a huge stake in British Overseas Office Retail Group. As mentioned, the CAT Minister, Rob Davies, on the show. Here's a word of caution. The economy needs to diversify. And for those who still haven't done it, we tell you how to plan your holiday. All right, first up, let's have a look at the market. Well, the JSE closed flat as traders were holding for news regarding the European Central Bank's announcement on stimulus measures for regional economy. The all-share closed lower while the top 40 listed companies remained unchanged from last week's close. Banks ended almost 2% lower while the financials were down by 0.5%. The resources closed 1% lower. The gold miners were down 0.8%, while the platinum stocks ended 1/3% weaker. Now let's look at the currencies. The rand hit its weakest level against the worse than expected trade data in afternoon trade. The local currency felt an all-time low of 14.50 to the US dollar after South Africa recorded a high trade deficit of 21 billion in October. It closed at 14.46 rand to the dollar. The pound closed at a, shocking 21.70 rand. 1 euro is equal to 15.25 rands. Commodities, gold bounced back from its 5-year low as investors rushed in to grab a bargain following recent weak prices. The platinum price remained flat for most of the day. Meanwhile, Brent oil, the global benchmark for oil, fell by 53 cents or 1.3% to $45.58 a barrel. Looking at the top gainers on the JSE by volume, Fortress Income gained 1%, closing at 16.87 a share. Now, Europe Property Investment ended gaining 3.5%, ending at 166.50 a share. Everybody wants to know about MTN. Well, they closed 1% higher at 145 Rand 16. Over to the losers of the day. Nampak ended 1.1% lower at 25.37. Property developed Redefined entered 1/3% lower at 10.55. And Banking Group First Rand closed 1.6% lower at 47.02 a share. All right, and now we're joined by market analyst Rob Petropello. We know him as Robbie P, and he's from Vunani Private Clients. Robbie P, welcome to you. Great to see you again.
And good evening, and congratulations on your first show.
Thank you, Robbie. Good to have you here. Robbie, we spoke about the Rand, an appalling day for the Rand.
Yeah, and it's a bit of a double whammy, unfortunately, for us. The euro itself has dropped to its lowest level against the dollar today. As investors hang on and see what sort of stimulus the ECB might put forward. We know they're going to do something, but we don't know what. So it's more about dollar strength than anything else. And unfortunately, that trade deficit number that missed analyst expectations by a large margin and surprised very much to the upside. That's when we saw the spike and hit 14.50 Rand to the dollar. And that's just symptomatic of exporters really struggling and feeling the pinch at the moment.
But I see the rand weak against the crosses, too weak against the pound, weak against the euro. It's not a great time for the local currency, is it?
No, it's not at all. And also the threat that we have now is, well, this week we're waiting for further ratings from Fitch and the S&P, which we should find out by Wednesday or Thursday. You know, and they have warned that there might be a further downgrade coming. So not looking good for the economy and hence the rand.
Robbie P., another bad day for resources. I mean, we've been talking daily. We saw the resources, 2-3 months ago, starting to come under pressure. People came bargain hunting, only to find out that they kept on falling. Lonmin, of course, a great example. Kumba Iron Ore had another disastrous day.
Yeah, just, you know, the Kumba story really revolves around the Chinese import price of iron ore, which broke the $40 level this morning in Asian trade. So Kumba reacting to that as well as the weaker rand, and we saw that stock down at the close just under 12%. And there is a flood of iron ore in the market, as with most commodities. And the real thing about the strong dollar is that a stronger dollar means that lower commodity prices are going to persist. And it's really not the space you should be playing in unless you're a day trader trying to take advantage of the volatility. And that's really where the quick money is to be made.
All right, Robbie P., a top trader at Vunani Private Clients. We'll be definitely speaking to Robbie again. It's going to be one of our regular guests here on Biz Sense. Hey, Robbie, thank you.
Have a good evening.
All right, and now it's time for us to look at the story of the day. All right, stepping into new shoes, fashion retailer Truworths International is buying an 88.9% stake in Britain's Office Retail Group for 5.5 billion rand. The British retailer's management will retain an 11.1% stake in the office. As per the statement issued, Truworths has the option to buy that stake within 3 to 5 years. Office, of course, a footwear retailer with 150 stores, would be a Truworths' first entry into Europe. So pretty exciting.
And we've obviously seen quite a lot of South African retailers expanding in the likes of Europe and the UK. You know, for example, Foschini Group with Phase 8. We've seen Spar do it. We've seen Brait, which is an investment holding company, buying into big UK retailers like New Look in Iceland. So it's definitely been a trend we've seen for quite a lot of the retailers, even Woolworths, who are expanding more in Australia, to go and seek a bit of developed market growth. They obviously report in rands, and their share price is based in rands. So when the rand weakens to the pound, and they're earning money over there in pounds, the actual weakening of the rand will benefit their earnings on that side.
All right, I'm still joined by market analyst Robbie P. In the studio. Robbie, I want to get back to those resources. Are they a good buy at the moment? I mean, we've seen a share like Kumba Iron Ore falling from what, 600 rand to 42 rand. In the long term, could this be a good buy?
Look, I think there's very much a danger of a value trap at the moment. And as our asset manager always seems to say, is you've got to trade in the direction of the fundamentals. They would make a poor investment at this stage. As I said earlier, I think resources offer, or resource stocks offer, more short-term traders opportunities because they've been so volatile. And we really are in short the bounces territory. And until that fundamentally changes, I would be staying far away from resources at this stage.
And the general market, I mean, we saw the market peak in April. It came at around 55,000. It came down to around 48,000. It has rallied, but it's not convincing, is it?
It's been a soft rally, and really it's because emerging markets, and especially the South African market, is very much out of favor with investors at this stage. Just this morning in Asian trade, we saw that the emerging market index fell yet again 3%, which means that the emerging market index has fallen as much as 15% just for this year. So investors are very much risk off at the moment. And when you're talking in terms of local resource stocks, local equities, I think they're going to try and find a bit of protection elsewhere.
All right, man with his finger on the pulse of the market and the stock market, Mr. Robbie P. Now, moving on, earlier today, I spoke to Minister of Trade and Industries, Mr. Rob Davies, a candid conversation with a rather candid man. Speaking exclusively to ANN7, the minister cautioned that the economy needs to diversify and move to the value chain. Let's listen to what was said in that interview. The SA economy, of course, is very fragile at the moment. A lot of things are contributing towards that, the weak rand, the slow growth, even the drought. Also, transformation seems to be on the back foot at the moment. One man who has the chance to turn that all around is the Minister of Trade and Industry, Rob Davies. So, good afternoon to you, sir.
Hello.
What is our priority at the moment, and what are our challenges?
Well, I think our priorities arise from the challenges. If you look at the challenges that we're facing right now, I think we are encountering a series of external shocks. I have compared the onset of the global economic crisis to an eruption of a volcano. The first epicenter was in the financial centers of the United States, but all the tectonic plates are linked, so the impact was felt around the world.
Yes.
And the current phase, I think, is striking us not just in the form as it did earlier of just depressed global economic conditions, although those are around. It's also striking us right in the heart of our productive economy, in the mining sector, where we've seen a very sharp tumble of mineral prices, where platinum is about a third down on what it was in 2012 at the height of the commodity super cycle. Gold is about half of the price, and iron ore is only 1/3 of the price. Yeah. And then on top of that, we have the effect of the El Nino-induced drought, which may also be magnified by climate change. And I think that both of those shocks are going to be very, very profound in the period that lies ahead. What does this mean? I think it means that what we have been saying for quite a while is that we've got to find a new productive base to drive growth in this economy. If we look back at the period of 84 quarters from the end of last year, we only had 5% growth in 17 of those, and that was driven by the mineral commodity super cycle, no longer available, and by a consumption-led boom, again also not available without a change in the productive structure. We've got to diversify, we've got to move up the value chain, we've got to have industrialization driven by infrastructure, driven by regional integration, driven by innovation. I think all of those are elements of the construction of a new growth path that has to underpin job creation in this economy.
Right, let's just change gear a little bit here. Let's look at transformation and BEE. I mean, the charters don't seem to have worked. Some have worked, some haven't. Is it time maybe that we take a new approach?
I think we are in the new BEE codes, which have only just come in, and also in the initiative on the black industrialists. I think what we've been saying is that the pattern that we've had up to recently, where you've had basically share deals and people have got some kind of minor share in some established company, it hasn't achieved the effect of bringing historically disadvantaged people into the leadership of the economy. If we're going to industrialize, what we need to bring people into leadership of productive sectors of the economy. And I think that, for example, in the codes, we are emphasizing things like the necessity for people that want to earn points to score points on things like supplier development. So small companies can be drawn in to more symbiotic relations with big companies, skills development, those kind of things, and then a dedicated and focused program on black industrialists. So those are the new elements that we're trying to bring in, with a view to bringing people into really control, ownership, putting, as the phrase goes, skin into the game of becoming industrialists, taking risks, and supporting people that are doing that, rather than just supporting some kind of idea that there will be some sort of financial transaction that probably doesn't lead people to achieve positions of real leadership in the company that is supposedly empowered as a result of those transactions.
In Germany, they have a very successful system where workers are invited onto the boards of companies, co-determination. Is this something that we could try here?
Well, I mean, one of the elements of the empowerment process is, in fact, to support and encourage things like employee share ownership programs, stuff like that. We have detected that some of those have not been real empowerment, and so we had tried to deal with this in a particular way earlier on, and we're now looking at other ways of dealing with this. We have a commissioner that's looking at fronting. But we did find that some of these schemes in South Africa, people received rights of dividend flows perhaps, but not any kind of rights of ownership or the say over the company. And I think that we would like to take these into the direction of really empowering people who are supposed to be empowered to play leadership roles in the companies in which they are being empowered.
The 100 industrialists, that could take quite a time, and after all, it takes maybe 100 years to build up a big industry. What is your feeling on that, Minister?
Well, the 100 is an indicative figure. It's not the target that's fixed in stone. It's just an indicative idea. But what is going to happen is that we are going to construct a forum in which companies, development finance institutions that are going to be involved in funding black industrialists are going to come together. We're going to receive applications, and we're going to pick the best, and we're going to have a similar arrangement with state-owned companies about opportunities that they may have to supply into those state-owned companies. What we're looking at, and the definition is going to be very tight, we're looking at real industrialists. We're not looking at people who have got some small share in some manufacturing company and then grace that company with some idea that it's a black industrial company. Right. We're looking at people who are actually going to be put their own sweat, blood and risk into the venture. We want to pick the best. We want to give them fast-track support and emerge with a cadre of black industrialists that can actually play a significant role in leading the industrial economy of this country further forward.
The drought, let's get back to that drought. It's been a while since we've had a drought like this. Of course, it's going to affect your manufacturing, agriculture, probably even mining. How serious is it, Minister?
Well, I'm not directly in charge of assessments of the seriousness of it, but I think that we know that it will immediately have some impact on the agricultural sector, which is a problem for us because one of the value chains in the 9-point plan that government developed that we thought could be the fastest job deliverer was actually the agriculture and agro-processing value chain. So I think that will be affected negatively. At this point in time, I'm not really expecting that manufacturing will be suffering. Manufacturing, I think, has shown its robustness and has benefited from a much more competitive currency that we have now. So we've seen sectors of manufacturing which are not too directly linked up with mining, because the ones that are linked up with mining have suffered from the reductions in the prosperity of the mining sector. But the other sectors like autos, like clothing and textiles, like some parts of agro-processing, some parts of the production of capital goods, railway equipment, stuff like that for the infrastructure program have actually shown quite remarkable resilience. And in the last quarter's figures, which I think which you need to underscore, it's only one quarter, but manufacturing achieved over 6% growth, and it was that meant that we had 0.7% growth positive, and meant that it was the performance of manufacturing that meant that we avoided a recession, because we had a negative growth in the previous quarter. So I think that manufacturing does demonstrate in figures like that the potentiality and the significance that it has in this economy.
I suppose the obvious result of the drought will be an increase in food prices. That we can probably say is a given.
I think that is an expectation, but it could also mean that there will be fall-offs in production, and we hope not too many fall-offs in jobs. But it might also mean that the potentiality that we had and we're supporting for job growth will be delayed because of the drought.
All right, Minister, we thank you.
Thank you.
It's time for a break. When we come back, we'll tell you how to plan your holiday, just in case you haven't yet. We'll be back with you in a minute. Right, welcome back to You Are Watching Biz Sense with me, Stevie B. Planning that last-minute holiday may prove to be challenging and expensive. According to the Tourism Business Council of SA, they anticipate the various holiday spots around and across the country.
Millions of holidaymakers are expected to descend to the various holiday spots and entertainment centres across the country this festive season, be it at the coast, safari, or the nearest amusement park. While it is advisable to plan and book for that holiday well in advance, making arrangements for that much-needed break at the last minute is not an easy feat, given the increased popularity of the numerous tourist destinations on offer, especially during peak travel periods. Holidaymakers are advised to make arrangements well ahead of their time departure, preferably a few months in advance. Matsatsi Ramawela from the Tourism Business Council of South Africa cautions that one has to be prepared to pay extra when making that last-minute booking.
Well, first of all, I think the first statement you want to say is too late. Too late, whatever, opportunities that are still available, they may not necessarily be what people want when you make your booking this very late, and it may come at a very heavy price. But I think, let me not appear and say that there's nothing left. There are opportunities that are still left, but it may come at a very hefty price.
Having succeeded in making those arrangements, that is booking accommodation and having identified landmarks to visit, sorting out the preferred mode of transport becomes another critical element. According to travel website www.domestictravel.co.za, return flights departing OR Tambo International Airport on the 21st of December and landing at the Durban International Airport cost from 2,316 rands for a family of 4, with the most expensive option priced at 9,372 rands. Flights returning on the 2nd of January next year range between 2,316 rands and 6,636 rands. Flights to Cape Town cost from 5,776 rands, with the most expensive option priced at 13,403 rands. Flying back from Cape Town, prices range from 5,776 rands, with the most expensive option priced at 17,051 rands. Travelling by train from Johannesburg to Durban with Shosholoza Mail as the choice, tickets cost 330 rands per adult, with discounts on offer for children under the age of 10. Tickets from Johannesburg to Cape Town cost 690 rands per adult. Around 1,300 road fatalities were recorded during last year's festive season. And in the event that you decide to travel by road, motorists are advised to ensure the vehicle they will be traveling in is roadworthy and to ensure adherence to the country's road laws.
They need to plan their trip, they need to plan their route, they need to make sure what their destination is, if they're going to be stopping along the way. Knowing where you're going is going to give you a good idea of what the petrol costs are going to be, if you want to work that out for yourself. Also, if you want to know what the toll costs are going to be on the roads that you're traveling, the AA has a very nice function on our website, www.aa.co.za, where there is a route planner, and it does also give you a breakdown of the toll costs involved.
Travel experts emphasize that you should factor in the cost of getting there, staying there, and having a good time as part of a total budget before you pack your bags.
All right, Joanna Mokoki, co-founder and CEO, excuse me, Travel with Flair, joins us in the studio to discuss the matter further. Good afternoon to you. Good evening to you, should I say.
Good evening, Steve. It's always lovely to see you again.
All right, we've had you on radio, but I think you appeal more on TV because you've got a face for TV, not
Thank
radio.
God, you do.
I mean, you heard that a little bit earlier. A lot of people plan late for their holidays. It ends up costing more. I know if you get air flights and you book well ahead of time, you can save yourself a fortune of money. What are some of the tips in planning a holiday, Joanna?
I do think that obviously you've seen that the rand is at an all-time low, and it's not so safe anywhere around the world. So I certainly would urge South Africans to travel internally, and for me, I think there's some amazing, breathtaking places that South African can be able to explore. And tips on how to travel best. For me, I've always said, as long as I've got a toothbrush and I have my credit card and obviously some identification, the rest can be sorted out, you know. But with South Africa, I think we're so blessed in that we have amazing spots that one can be able to even reach by car. You know, you can be in Mpumalanga and be able to enjoy a bit of game, a bit of beautiful sights. You can be able to drive to Durban. All you need is your family, a cooler box, and some lovely putt course, and away you are. So if there are people who cannot be able to afford flights, obviously because things are really expensive, and as you know, I mean, as a travel agent, I know that the earlier you book, the cheaper your tickets are. But obviously, at this late hour, you still can be able to get some sort of deals. I think I looked before I came into studio as well, and I could see, I mean, the low-cost carriers, you could get about 1,800 return, but it can go up to 3,500 rands per person if you're flying down from Joburg to Cape Town.
Right, I want to ask you one last question. Should you book your hotel before you get there, or should you go there and look for a hotel?
It is certainly, at this busy period, you certainly should book your hotel before you get there, because there's nothing as getting there with the family and it's late in the night and you're tired. But more importantly, people always look for the destination and look forward to getting to the destination. It is a journey, and you need to be able to enjoy the journey and relax on the road.
Chana, we thank you. Quickly, your website.
www.twf.travel.
Okay, lovely. Thank you very much. And now we shift our focus to the term of the day. Language used in financial circles can sometimes lead to the average person to lose interest. And with that, it's time for the term of the day. Today, it's headline earnings. Now, according to the Oxford Dictionary, headline earnings can be best described as a measurement of a company's earnings based solely on operational and capital investment activities. It excludes any income that may relate to staff reductions, sale of assets, or accounting write-downs. Okay, and here is the quick wrap of the headlines. The South African retailer Truworths has made its foray into Europe. The retailer has acquired 88.9% stake in British Office Retail Group. Minister for Trade and Industry Rob Davies says the economy needs to diversify further. And for those who are late in planning their holiday, be ready to pay more. Traveling by train can now save you some money. All right, so this brings us to the end of the first show. I hope you enjoyed it. Thank you for watching Biz Sense with me, Stevie B. We'll be back tomorrow, and we're going to be discussing China's influence in Africa and the bigger picture associated with it. We'll also discuss how to use project management in SMMEs. Do join me and the experts tomorrow. ANN7 Prime is up next.
Biz Sense was brought to you by Oakberry Resources and Energy.